Welcome back to another episode of my trading vlog. Today was a complete bloodbath in the markets. Was I surprised? Not at all. In fact, I made money today. So let's go ahead and look at AMC, GME, IWM, SPY, and go from there. I've been following this ascending broadening wedge in AMC, which you're going to see outlined by these blue lines. And I have two on the bottom. And this is pretty typical, where on one side of the pattern, there's actually two trend lines, an internal and an external. The difference being an external trend line does not cut through the price, an internal trend line does. And so what I did is I took the external trend line, which would be this guy, I copied it and pasted it up here. And what that does is it gives me an idea of where the accumulation zone is that's causing these thrusts upward in the price. And as you can see, AMC closed inside of that zone today, and it doesn't do that very often without moving one way or the other pretty powerfully. As you can see, the first time the price came and touched down here at 970, the move was explosive, and I called that reversal perfectly. And I didn't call it on this day or the day before. I called it on the Sunday before the week started. Amazing. This green candle that we had yesterday really brought out the doubters. Comments in my Discord, on the YouTube. Hilarious. Come on, you can't produce this much technical analysis content if you're wrong all the time. You just can't. So, I bought $12 puts yesterday, and well, I actually sold them at a minor loss today, but I did that so I could actually reposition, increase my exposure, and bought more $11.50 strike puts, which not only covered the loss in the $12 puts, but made me money. And I'll pull up my chart here on the 1 minute when we get there. What I want to say right now is we're going to see a big move in AMC tomorrow. It's either going to be up or it's going to be down. And guess what? We just tested the downtrend and said, hey, we respect the downtrend. So I'm expecting that this will be a confirmed breakout tomorrow of this pattern, leading to a low of 970. And it is possible to see that target reached in a single day. Doesn't mean it will, but it may. In fact, it's very, very possible that what we're going to actually see is the price break down, reach that target, come back up, before making its next move, whatever it is, right? I can see a 5-wave pattern here forming where this is wave 1, wave 2 peaks up here at the downtrend, and 3 is actually going to be an extension probably. It's probably going to extend. So we have 3 starting with leg 1, 2 of 3, and we're looking for 3 of 3, 4 of 3, and 5 of 3 before we get that 4th wave, which will probably test the downtrend again. And this is where I don't like to get into too much charting. You can't know what's going to go on this far down the road, but it makes sense then to see the 5th wave come way down, and I'll share what that yellow line is later. But yeah, you can see I'm expecting the price to just tank, and that's just what the markets are doing right now. If you don't like that, that's not my problem. That might be a reflection of your position and not my analysis. Moving into GameStop. Okay, here we go. Yeah, I took a good long look at GameStop. I was asked to spend some more time on it, so I did. And this is what I found. I found a 5-wave Elliott pattern, a motive wave through here. It's got its 5 waves, and they're pretty well formed. And they took place inside of a descending broadening wedge, which is a corrective pattern. But here we see a 5-wave form, which is a motive wave form. So it's probably telling me that we're having a clash of different waves here. We're probably in a corrective wave 2 overall, and that's why we have a 5-wave motive wave going down, but I digress. So there are a couple of important levels of support and resistance here at about $130 and $97. Call it $130 and $100. We did have another 5-wave form appear after testing this downtrend. This is the downtrend from the all-time high. So when we come back up to it in a rising broadening wedge like this, I get a little nervous because it does look like we're topping out. This was a high and tight flag, but now we're seeing it break down. In fact, what I actually think I see is something like a head and shoulder top, but it's too broken up. It's too broken up to really be that. So I really think that the ascending broadening wedge is the true pattern here. And when we came up and tested that 130 level and turned down, I was saying we need to close above this level to be bullish, but now we've come down and closed below it again. I think that we've formed a partial rise within this pattern, which is a very bearish omen and implies a breakdown. Now, this uptrend starts from the low at $3, and it hasn't been touched yet. AMC broke through its low, or its uptrend that started at 191. GameStop has not challenged its uptrend that started at $3. So it's possible that GameStop's going to come down here. Yeah, I don't want to see that happen, but it's just the markets are crashing. I think we're in the middle of a stock market crash right now. Let's go over to IWM first, and then we'll take a pit stop at SPY. So these are a bunch of chart patterns. I have a lot of new subscribers. I use Bukowski's chart pattern analysis on his website, thepatternSite.com. He has books too, and I don't have any of them handy, which is unfortunate. But essentially what you can do is you can backtest these patterns, and that's what I did here. So as time progresses, there are going to be trend lines that form, and you can build these patterns retroactively and backtest them. And the targets are almost always met. It's incredible. I'm just going to scroll through here a little bit. You can see we recently broke out of a broadening bottom, which is really bearish. To break out of a bottoming pattern is really bearish. And now we have this huge push. One wave down, two wave comes up, and that third wave is a slam dunk heading down, 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 down. And it's just going, it's flying. If you watched yesterday's second video, you'll know that I'm looking at a gap to H pattern, and that confirmed when the price closed below this candle here, the low that we saw on the 14th of June. So yeah, I'm considering more that there's more downside. In this gap down, this is a falling window. Bukowski calls it a falling window. This also tells me bearish continuation is probably going to be coming up. More downside, just more downside. Down more. Always down more. So the RSI is now starting to dip towards oversold. Still hasn't reached it. Looks like it's going to go crashing in deeply into the oversold. Look at this volume. That is a serious thing to consider, that the price is falling in a rising volume trend. Yikes. Implied volatility is ticking up. I think we have a lot more going on to the downside. SPY is next. This ETF is currently in a broadening pattern as well. And here's that gap to H pattern I was talking about. It confirmed when it closed below 370, which actually puts a target down for 350. And it might take a couple of days to get there. I would love to see it in one day. Just an absolute slam dunk. Whack! And the price plummets. And the reason why I want to see the price drop hard and fast is because that makes the bounce better. The volatility is higher. It's easier for me to trade, etc., etc. The stock market is coming down, and that's okay. A healthy retracement might be a 50% decline in the markets from their all-time highs. And, you know, if the world needs to know that you can make money in a downtrend, in a bear market, then the world needs to watch my channel, because I really do believe that if you're relying on the markets to only go up and 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 up, you're relying on an unsustainable trend of hyperbolic exponential consumption in a world of finite resources, right? So learn to trade both ways. Here we go. So I think that's really where I want to leave it at 7 minutes. Now, I do want to cover this page I have pulled up on the patternSite.com, Bukowski's website, and it's this 3 peaks and spike pattern. I know what this is. I followed this trend for months as the price plummeted from $45, and so do the people in my Discord who have been here for a long time. So it's exciting to see this. Bukowski actually added this pattern in July of last year, so it's not on his big list of chart patterns, and I think it'd be fun to go back and look for this and do some back testing. This makes so much. This is like exactly the thing we were watching in my Discord for months. I think that's all I have for today. If you liked the video, please subscribe. Happy trading.